How's it going, everybody? Mike Weber here, your Los Angeles real estate broker, with your market update for the beginning of May. A lot to talk about in this update video. The market continues to be very strange in certain ways. A lot has really happened. In fact, today the Federal Reserve raised rates another 25 basis points. Most people believe that the Fed is now going to be on pause, and that most likely they're going to start lowering rates possibly as soon as towards the end of the year. Of course, anything can change on short notice with all of these bank failures that we're seeing, and they could go the other direction and start lowering rates much sooner. But at least for now, it looks like we're going to be on a pause for a while. Interest rates, surprisingly, in the face of those rising federal funds rates, have actually trended down for the most part or stayed somewhat stable. In fact, they went a little bit lower a couple months ago because the market was anticipating the Fed to already pivot and lower rates, which they held on a little longer than I think everybody expected. And we saw a little boost in the real estate market as a result of that. And in addition, we continue to see the government kind of intervene in the market to try to stabilize it, pump it up to some extent. We just had a program called the California Dream Program, where California gave out 20% down payments, closing costs completely free, essentially upfront for potential buyers to buy a home. Of course, the money ran out almost immediately, but we saw a huge boost in activity, multiple offers on all kinds of properties all of a sudden while that program was underway. Of course, a lot of that excitement and activity has since died off. In addition, the current administration came out with a new law that essentially is going to make it such that if you have high credit and want to put a large down payment, you're going to pay a substantially higher interest rate than a buyer that has bad credit or low credit and a low down payment, kind of turning logic on its head, if you will. So again, trying to stimulate the market, make it less expensive for certain buyers to be able to get out there and buy homes. With all that said, we are in this incredibly low inventory environment, low activity environment across the board, but somehow, amazingly, prices are hanging in there or trending up just slightly. So the things that are selling are still somehow selling at relatively high prices, even though there's not much out there and we're not seeing many properties actually make it into escrow. And with that said, let's go ahead and take a look at the data. So starting out in Los Angeles County for median home prices, amazingly, miraculously, we saw a little uptick. Again, I'm guessing because of that slight dip in rates temporarily, in addition to maybe some of that California Dream demand where buyers were getting up to 20% and closing costs essentially covered by this state program. So we saw a lot of activity as a result of that. That pushed prices up temporarily. So slight uptick, down just 7.8% year over year, which is pretty amazing with the higher interest rates and all things considered. Now, when we get into closed sales for Los Angeles County, we start to see kind of the weakness in the market in terms of, what's actually happening, how much activity is there. We're down about 39% year over year from an already pretty soft year compared to the year before. So not much activity taking place. When we compare that to pending sales, on the other hand, that looks even worse. We're down over 50% from a year over year standpoint, which means things are not getting better, they're getting worse, which means most likely this month will end up looking even worse than last month because pending sales are down so much compared to closed home sales. The last thing I want to show you for Los Angeles County is kind of the general inventory level. I normally look at supply of inventory, but in this case, we'll take a look at active listings on the market because the trend is just so extreme, it's almost hard to believe. I mean, we've seen 5 years of just year after year after year of declining listings on the market. We're down 17.5% compared to a year ago. But as you can see from the chart, I mean, it just continues to go lower and lower and lower, which means less people are out there putting their homes on the market and selling for obvious reasons, probably the most prominent being that they're going to have to refinance into a much higher interest rate if they buy a different property. Now let's go ahead and move on to the South Bay beach cities and see how that compares. In terms of median home prices, amazingly, they're hanging in there pretty strongly, even in the face of these elevated interest rates. Although in the county of LA, we had a slight rise. In the South Bay beach cities, we just kind of pivoted sideways. We're down about 6% from a year over year standpoint. I mean, so really pretty strong prices. Granted, they are well below their all-time record peak, but overall, I would say all things considered, they're still very high given the higher level of interest rates in the marketplace. Same story in the South Bay with closed sales, down about 40% year over year. Again, not much happening right now in terms of sales making it to the closing table. And finally, we'll look at the supply of inventory. And unlike the county of Los Angeles, we are actually seeing quite a bit more inventory coming on the market. We're up 57% year over year and still not a ton of inventory at 2.2 months, but certainly quite a bit more than we had, just recently. And it shows a sign that inventory is finally growing, at least in the South Bay beach cities. Obviously, it'll be interesting to see if that continues. And I think really overall, everything is going to hinge on what happens to these interest rates. I think a lot of people are waiting in hope that they're going to be able to get lower rates in the short run, in the near term. And whether or not that happens, I think that's going to really be the biggest factor that ultimately impacts the housing market. Of course, we're probably in a recession now or very close to being in one. And certainly there's going to be a lot of layoffs. There's going to be a lot of pain throughout the economy. And that could also have an effect on the housing market. But I would imagine the biggest effect is going to be from interest rates. Of course, I'll be keeping an eye on it, keeping you up to date. If I can help you guys with any real estate needs here in the greater Los Angeles area, reach out to me. I would like to do that. If you haven't subscribed, go ahead and do that now. Click the thumbs up. Hope the information was useful. Look forward to seeing you next time. Take care.